His testimony to the U.S. Senate, the Fed Chairman Jerome Powell reaffirmed that the Fed could increase the size of its interest rate hikes and raise borrowing costs to higher levels than previously projected, if evidence continues to point to a robust economy and persistently high inflation. In his testimony to the Senate Banking Committee, Powell said that, quote, "The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rate hikes is likely to be higher than previously anticipated," end quote. The Fed chair acknowledged that inflation has been moderating in recent months, but added that, quote, "The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy," end quote.
We are seeing the effects of our policy actions.
U.S. inflation as measured year over year has slowed from its peak in June of 9.1% down to 6.4%, but its progress has stalled in January. From December to January, the Fed's preferred measure of price increases, namely the PCE index, rose by the largest amount in the past 7 months. Powell's hints of higher Fed rates for a longer period of time is sparking concerns that the U.S. economy could be slowed significantly or even pulled down to recession.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the...
Meanwhile, Australia's central bank increased its benchmark interest rate by another quarter point to 3.6% on Tuesday, as it continues trying to tame inflation. It was the 10th rate rise in a row by the Reserve Bank of Australia, bringing the rate to its highest point in 11 years. The increase will put more pressure on homeowners, with many already paying out hundreds of dollars each month more on their mortgages than they were a year ago. The bank has been trying to counter inflation, which came in at a hotter than expected 7.8% in the December quarter, its highest level since 1990. The bank has an inflation target range of between 2% and 3%. Australia's Treasurer Jim Chalmers told lawmakers that the inflation problem was global, but that strained supply chains in Australia were contributing. He said somebody with $500,000 mortgage would be paying an extra 1,000 Australian dollars, about $672 US per month, after all the recent rate rises.
The Reserve Bank has just announced its decision to increase interest rates by another 0.25%, bringing the cash rate to 3.6%. This will make life harder for many Australians who are already under the pump. This was expected, it was flagged, the markets anticipated it, but it will still sting. These interest rate rises, which began before the election, the cumulative impact of those rate rises for every $500,000 owed is now about $1,000 a month. That's the cumulative impact of these rate rises, which began